there, everyone. James Withall, CEO of Rupert Resources. Thanks for taking the time to watch this. Yeah, I guess a lot of you have watched our presentations before and our recordings. Rupert Resources, all about the Ikkari discovery and our Rupert Lapland projects that we have. So Northern Finland and the continued exploration and the excitement around that. So obviously we announced our 4 million ounce resource back in September, and we're continuing to do more work. So again, thanks for your time, and thanks, Matthew.
Okay, James, lovely to see you. We did speak recently, but I wanted to catch up. There's been a lot of activity in the market, M&A activity, big tickets being written here. We've just seen Kinross come in for Great Bear. We've obviously seen earlier Kirkland Lake and Agnico get together. Just wondered about how that's going to affect your decision-making for 2022. But I'll start off very specifically, the Agnico deal. What did that tell you?
Look, I think it's an interesting deal for Agnico and Kirkland. I mean, it really consolidates some of the higher margin assets in the business, and that's ultimately, you can see what they're trying to do here. You look at that selection of assets. They've consolidated the Abitibi. The company, they've got big consolidated land package in Canada. They picked up these, very high grade, high quality asset in Victoria, and obviously that whole Victorian goldfields. There's quite a lot going on there now as well that it wasn't 10 years ago. So I think strategically it works very well, and you have they're now in the top 3 producers, but also most importantly probably one of the highest margin of the top 3 producers, which is probably the key. And yes, their assets aren't all really large, like 500,000 ounce producing assets, but each of them, if you dig down, it's about the quality, and that's I've talked about that before, so I think it's a good deal.
It's a good deal. But I think people's initial reaction is, well, what does that do for projects that Agnico is invested in, such as yours? Have they got enough cash on the balance sheet that they don't need to start offloading stuff? Or, can we expect to see them start looking at some of the less significant projects and offloading?
Well, I think my understanding is that, they didn't have many, I guess what I saw to things that they'd like to offload, or there's not that much in those portfolios that is non-core effectively for each of those companies. So I think in reality, I mean, my sense of it is that they're still very interested in the other things that they're invested in. They have a strong, you heard a lot of the notes from some of the calls they've done and the interviews. They are, they're very committed to Finland. Kittilä is a phenomenal, very long life asset for them. You're looking at an asset there that's probably got 20, 30 plus years of life there. So I think it's interesting how they've committed to certain jurisdictions, and if Finland is a key jurisdiction, that's obviously very good for us, because we that's why they invested in us in the first place, and had that strategic investment, because they liked what we were doing and saw a great opportunity. And obviously Ikkari is a great asset in that jurisdiction for them.
Yeah, and if we look at this, the Kinross Great Bear situation, I think Kinross was desperate to get back into Canada, given that they're kind of spread far and wide elsewhere in the world. So I think that was the number one priority for them. And let's not talk about price, because that's always a tricky conversation, whatever people may think about the premium paid on that one. But it does say there's an air of M&A, which is inevitable given the price of gold for the past couple of years has meant that these big companies have been accumulating cash, and M&A is inevitable. They need to, refill the hopper, as it were, with ounces. What does that mean for the way that you look at the market going forward? Because you either need to make yourself attractive, because Agnico is only a 15% shareholder, or you need to make it defensible. So how are you approaching it?
Look, I think it's been very interesting watching these transactions. We've seen the Pretium transaction, the Cisco transaction with Northern Star, and obviously now the Great Bear transaction. So you can see, all of those, they're very Canada-centric transactions, obviously all in their own backyard, effectively, for the companies doing those transactions. So apart from Northern Star, obviously, but that's really they're pushing more into Canada. But I think, what does it tell you about all of them? I think it tells you a lot about the market in terms of these corporates. They do need to add other assets. Reality is, it is the companies like ourselves and the Great Bears that tend to go out there and do the risk element and find these new assets. And so, but we know that, I guess we've always run the company in a way that we're trying to demonstrate that, how good our assets are, and we've never been, and we're not, I guess you say about being defensive, it's more about saying, you know, let's just get the information out there and demonstrate how good it is. And reality is, if we had an approach, just like these guys have, we'd assess it. You know, what's the best outcome for the shareholders? Ultimately, it's what's the best way to optimize the return on the shareholders' capital, and that's always the way we run the business. So I think, is there a sort of inevitability that, you know, these things are going to continue? I think that there always has been in the industry, that if you find something that's very good, eventually people will potentially want to come and have a closer look.
But you as a CEO and you as a board, Tom, etc., you know, you guys need to make sure you've optimized the value at every single point along the curve, as it were. And you know, and most people will reference the Lassonde curve, and it's not a smooth line of upward trajectory. It's got bumps along the way where people assign different values to the company. So, you know, there are going to be moments where you may want to attract an offer, and there'll be others where you think, actually not right now, because we're not going to get the full value that I know is here. And then you've got to have a difficult conversation with shareholders to explain that. So how do you manage that?
I think the way we're trying to run the company is to try and manage that situation out by keeping all those different tracks running effectively. You know, what we don't want people to think, and what we've been very keen to get across in all the marketing we've done, is that we haven't stopped looking to find the next Ikkari, because the issue that you have in the industry is if you just go and find something and put a stamp on it, and people could say, oh, well, you've just come out and put a resource on Ikkari, that's you know, that's what you're going to find. But I think people really have to realize that is just a milestone, but it's important to have those milestones to lock in value along the way. But you know, we're running the company with three things going on right now. We have the resource drilling at Ikkari. You know, that's sort of our middle path, if you sort of mean, improving the quality of that. But either side of that track, we have our generative exploration. And we've always spent $5 to $7 million on generative exploration, which is a pretty high budget, and we're continuing to do that. So one of the best ways to ensure you can get the optimum value is to make sure you go out and drill all the possible targets and make sure there's enough evidence. So if you do have an approach, there's enough information for them to do an evaluation on. And then on the other side of that, we're advancing towards the PEA and de-risking the asset that way, which also creates value. So we're trying to manage the business in such a way that as you keep those three tracks running, you should be able to minimize any sort of downturn that you might have, sort of Lassonde curve downswing as you go to that stage. That you might get if you didn't keep on exploring, or, you know, we're so bullish about what the exploration upside is on the license package. I think we've tripled our license package over the last few years, and we're just beginning to understand this region. So look, I mean, we're kind of, the M&A is there in the background and is going on, but in terms of our business, we're just focused on, you know, really, we've got a lot of drills turning, making sure we continue to find as much as we can as efficiently as possible.
Okay, so you're not wasting time, money, energy, etc., trying to solicit bids. You're focused on those three things, which obviously Ikkari, advancing that, moving that through study stages is phases is obviously what you need to do there. But tell me a little bit more about the work on the known discoveries versus the generative exploration components in terms of what are you doing in 2022?
Yeah. So look, I mean, yeah, it's simply put, I guess, by moving the quality of Ikkari up and doing the infill and doing that's one element of it. But we haven't found the limits of Ikkari as well yet. So I guess let's divide it into just the sort of upgrade of Ikkari from an inferred resource to an indicated. You know, that is one project, and you'll increase the value of those ounces that we've already discovered significantly by doing that work. But then the other side of that, and really that is even at Ikkari, is all the generative exploration. So one of our best exploration targets is probably the extensions to Ikkari. You know, you look at that, and if you look at, you're spending maybe, you know, part of your exploration budget, this is where you have the most leverage in this business. If you can spend, you know, $5 to $10 an ounce in terms of your exploration, and you turn that into $170 an ounce as sort of the metrics that we saw with the deal yesterday, that is, you know, that's a phenomenal return on capital. So, you know, we think we think our team is pretty good at doing that. We've done a very good job of it to date. And that work is so important, that generative exploration, both satellite deposits to Ikkari. We talked about one in the press release the other day, Haina Central, Haina South, but also, this is just a small fraction of what is, a belt that's 20 kilometers long. So and holds a lot of opportunities.
Right. So I know we're a little bit tight for time today. So I'd love to actually explore the smoothing of that curve component with you, maybe in the new year, and explain, because I'd love to. Because not many companies talk that language, right? It's just they accept it, it is what it is, and that's why it's always been this, we shall behave the same way. I'm intrigued about how you can try to smooth those curves. So maybe that's one for the new year. But tell me, from the perspective of, you're an ex-markets guy in London, the folks in town, and you can pick up the phone to them. What are they saying about precious metals for 2022? What's it look like for them, and what are they going to do?
Yeah, I think it's 2021's been a pretty interesting year for the gold market. There's no doubt about that. It's been, I guess, net, I think we're almost flat over the year, aren't we? So, but the events of the year, if you look back on it, all the different drivers of it, the interest rate drivers, it has really been the key one. And I think, looking into 2022, the picture almost looks more uncertain in terms of financial markets, I think, and in terms of where people are. And I think the argument to hold gold in a portfolio is as strong as it's ever been. And if you do have that, gold will continue to perform well, and maybe continue to outperform other currencies. And I don't know how it doesn't outperform it should continue to do that, because obviously we're not going to get through the further ramifications of the COVID situation and the issues we have with some of the real estate side in Asia, and all those different ramifications that are going on, a continuous disruption to the market without really a very easy monetary policy continuing. So I think in that environment, it's just such a positive environment for gold as a currency, as an asset. So with that, I think, I feel pretty positive about it. I guess some people say, it's going to rip to a very high price. I'm not too worried about that. But reality is, you're in a high inflation environment right now. People probably have concerns in the mining industry that inflation is going to affect them. But if gold does what it should and provides a strong hedge against inflation, it should continue to outperform. And that makes gold equity companies very attractive in that situation. And they're still trading, they would all tell you, or certainly the producers would say, they're all trading on pretty low multiples compared to what they were. I think they're down probably 25% on the year. So it's a very interesting market going into 2022.
Well, we're excited about it too. So look, like I say, short of time, have a great Christmas. Thank you very much for the end of year roundup. Excited for that 3-track strategy of yours, and starting to see that come through. And we'll see you, I guess, January, February, shall we?
Yeah, no, thanks, Matthew. It's going to be a busy early start to the year. 6 weeks going. The team are flat out in Finland. So, look forward to giving you some more news and chatting about the way the company's progressing. Thanks very much.
I may have to swing by, actually. I'm off to Finland for Christmas. So I'll be able to report maybe live on the ground. Who knows?
Yeah, you're welcome to go and look at some core if you like. There you go. We'll take you out in the field and stand next to a drill rig in the cold for a while.
My family would love it.
I would.
We'll be talking about it for years. I suspect for all the wrong reasons. Okay, James, lovely to see you soon. Cheers.
Okay,
bye.
Cheers. Bye.